What is up? I am gonna be reviewing this week. Last week on the 7th, which was last Friday, I did a market breakdown, and today is the 15th. So 1 week after, yesterday was Friday, the 14th. I'm gonna break down basically a continuation of everything that I talked about on the first video. It's called Market Breakdown for 8/7/26. If you guys want to watch that, I'll try to link that video down below on the at the end of this video. But right now it seems a little messy. I just have a lot going on. Obviously, we had a whole trading week, and I was very active trading. Um, on the previous market breakdown video that I will tag at the end of this video, I basically made the outline of this. You guys saw me mark up the levels, and as you can see, all the red levels are just Friday close. This one is not Friday's close. I don't know what that is. I have to see what I did there. I might have made a mistake or something when it came to when I go down into lower time frames. You can take a look, but let's just see what's going on over here. And the emphasis I want to make here, let me do this. Can I? Yeah, right here. I'm gonna just talk really quick about the weekly time frame. So, one thing about trading that I'm starting to understand more of is trading is just a game of prediction. You're trying your best to predict what the next possible candle is going to do. And when you first start learning trading, you don't understand how these levels, as you scale down into smaller time frames, how they layer into one another. So, like for example, that's the weekly, and then you go on to the daily, and it's even smaller candles, and it's more data, right? Because the smaller the time frame, the more data you have. And as you can see, as you go down into smaller time frames, it's more and more information. So that type of overload sometimes can drive like people who are new to trading insane. And I kind of want to explain that to you guys as to how you guys can look at these higher time frame candles like the weekly and the daily, and what's the right mindset that you should have so that you can understand the right prediction. And we're going to start with the basics because in a way time is fractal and so are these time frames. So what happens in this time frame and the way that the market moves in this time frame happens in all other time frames. However, it's just smaller candles because there's more data. You're basically zooming inside of this candle, and there's itsy bitsy tiny candles inside of that candle. So think about it like a Russian doll. Have you ever seen those Russian dolls that you open it and there's a smaller Russian doll inside of it, and then you open it and there's an even smaller Russian doll inside of it, and then you open it and there's a little tiny Russian doll, and then you keep opening and opening it until the point where you got the tiniest little Russian doll. And I don't know how deep it goes, but you know, some people really like to get crazy with it. So think about candles like that. So I'm gonna just explain this version right here of the candle. So you see how we have this, oh yeah, if I write on it, it's gonna write everything. And I don't wanna delete everything yet because I have things that I wanna share with you guys on here. So we're gonna keep it this way, and we're gonna keep it rolling, and eventually then I will write on it for you guys. But just follow my, my little crosshairs right here. So as you guys can see, the market, hold on, sorry. The market was pushing up. So I'm gonna kind of give you an overview of the market, right? So this is the overall time frame, and this goes all the way back to September 24th. So we're gonna focus on this right here, all right? So from October to, let's say, December, we kind of had like a consolidation. And then start of the year 2026, you see the market came down until end of March 2026. And then beginning of April, the weekly candle, or the last candle of March actually, the 30th, the last week of March, we got a bullish candle which broke the momentum of the bearish candle. So a bearish candle opens, trades higher, and then trades lower. And that's why it creates this wick. So when we open, the bearish candle always opens right here. So it's every candle is time based. So this is a weekly candle, meaning this candle opens at 6 p.m. on Sunday, right? So at 6 p.m. on Sunday, this new candle gets created. It looks like it's Monday. Every candle is Monday, but that's just because Sunday doesn't really count because it just starts at 6 p.m. It's not a full day of trading. All right. So 6 p.m. Sunday, the market opens, and price first, and you see this wick here, it's bearish because price first at 6 p.m. traded higher, and then later in the week, price shorted and went lower. And once price passes the opening price, it turns into a bearish candle. So it opened here and traded higher. At one point, this candle was a gray bullish candle, as you see right here, because as the bullish candle opened at 6 p.m. on Sunday, on the 30th, the market traded lower. As you guys can see, we have a little wick under here. See, we traded lower, and the low, if you guys look over here, we have the open, high, low, and close. This is the prices of each candle. So if you hover on top of the candle, it will tell you that the open of this candle was at 23,484.75. I'm gonna write on the chart right now just for you guys to see what I mean. So this one right here, the open of it was at 2484. Why is it not showing? It's not 100% on here. It's not 100% because I didn't put the magnet. Hold on. Okay. Let me see if it does now. So the open 23,484.75. So if you guys see it when I hover over it here, if you guys look right here where it says the O, I want you guys to see the O. Let me just make it so that it's not a bunch of stuff on it. Coordinates, when I put the open and you anchor it with the little magnet on the very low, it'll anchor it to the very exact price. And when I hover my crosshairs on top of that bullish candle, what do you see next to the O? 23,484.75. And then you guys see right here 23,484.75. So the bullish candle opened at 6 p.m., traded below it, so till a certain time on Monday or Tuesday, Monday clock, sorry, Sunday to Monday, sorry. From a certain time, it went from the open to the low. So this open to the low, because it's the low of the bullish candle, because it's the bottom of it. And then if we look at the low, 23,253.75, you're gonna see that right here with the L, where the L shows when I hover over 23,253.75, exactly the amount. And then if we do the high, if I hover over it, that's the close. It's not the high, that's the close. 24,425.50. You guys can see right here, 24,425.50. And I'll hover over it for you guys to see right here. This is the close of it. So it would be under C right here. Look right here. When I hover 24,425.50. And then we have the high. The high, when I hover over it, 24,642.25. And you guys can see that's exactly where it went. So I'm just trying to explain to you guys how the candles open and close. So as I explained to you guys, that bullish candle, same goes for the bearish. At 6 p.m. on Sunday, it opened, traded higher, rejected off of a whole level, 25,000, which I can explain to you guys more of later. And then we traded lower, closed at 23,548.25. I'm not going to do the same thing I did with the bullish candle. You guys get the idea. And the low was 23,524.25, which is that very little wick. So on Friday, we closed here like this, and then the following week on Sunday, we saw the market traded lower and rushed higher. So beginning of April was a very bullish month. We got extremely fast high prices, and a moment. So now that we explained a little bit of the current weekly chart and how it's moved, we see that price has had a significant push higher in April all the way to May. So middle to end of May, till May, end of May. And then June we started getting bearish candles. First week of June, second week, third week, fourth week, it kind of consolidated here. Traded lower, targeted sell side liquidity or liquidity. When I say liquidity or sell side liquidity, it's just where there's most likely people who have bought here and we're trying to look for higher prices, but the market came down and took them out of the trade. So high, low, higher, high, high, low, lower, high, sorry. And it kind of consolidated here till June, and then July, second week of July, we got a break below it right here. You can't write on it or else it'll break on the screen. You got a break below it here with this candle. This next candle here is when you would go into lower time frames because you got that confirmation that it was probably going to go lower, to enter inside of this candle at any point where you see an inefficiency to then target sell side liquidity. So you would try to enter it within the middle of this candle and then target the external liquidity at which would be this low and possibly like these lows here. These are all liquidity levels that were swept up to this very low here from the 27th of April. So anyone that was long from the 27th of April to June, they got stopped out. June or July, so let's see how we can expand this further. So as you guys can see here, so we had a bullish month in April, consolidated here, and in July price took structure right here. So this is a market structure shift. However, we had a market structure shift lower, and then now price, after taking sell side liquidity here from the 27th of April, we had the new month of August be bullish again. So I'm thinking it's possible we're gonna go higher. They're targeting these highs, I think, and it's possible we can get another run like this. I'm not sure. Obviously, we wouldn't expect a whole run like this. What you would do is target the nearest liquidity, which would be the equal highs over here at the top. So let's go down to a smaller time frame. And I am going to show my annotations now. Let me see if I can clean it up a little bit, because I do know it's a little, probably could overwhelm a lot of new people that are new to this, and I don't want to overload you guys, but it's also very hard to like delete stuff on your chart sometimes. Sometimes you just gotta start over fresh. Okay, I'm gonna start. So this is a daily, right? As you guys can see, this purple zone I have here is the second to last candle that we had in July, the last 2 weeks of July before the August push higher. This created an engulfing candle. Obviously, engulfed these two candles, and now the second candle of the second week of August, we're taking down the sell side candle from the here. So when you go into the smaller time frame on the daily, you can see we all obviously have more candles, more things to look at. Okay, what I want to show you guys is this. So on the daily, as you guys can see, after we got that extremely bullish candle in August, first week of August, Wednesday, it was a Tuesday, you see, let me try to explain it a little bit better. So when we go down to the daily, we can see here, this is Friday, this is the 31st of July when the market closed, and then we have first week of August, the 3rd, instead of it opening near it, we open higher. So we opened above where price closed. Price traded lower to the open of the bearish candle from Friday. So it took out any, liquidity that was in there. 1 second. Oh, okay. And traded higher to taking the buy side liquidity here and creating equal highs over here. When that happened, we did have bearishness down, and it tapped the high of that weekly daily breaker block. And as you guys can see, we traded into it, and it traded higher right after that. If you guys also look over here, I'm pretty sure that's like 50% of it. Literally to the T. 50% of it. And so we came to the very first down candle that happened on Wednesday, and Wednesday we created the high that day, took out the highs from Tuesday, and then we traded lower on Thursday. Wednesday to Thursday we traded lower. Friday came and found support, obviously, because Wednesday and Thursday we traded into the bullish breaker block, and then price ran higher. So how can someone that wants to trade utilizing the higher time frames utilize these levels? Well, not 1 hour now. As you guys can see, that's the daily breaker block. Another thing I want you to point out to you guys is we have an important level here, which I'm gonna fix because it should be 29,500. I think I moved it by accident. So as you guys can see, we have that daily breaker block, right? And I'm trying to like break it down to you guys as the smaller time frames come. You really only need the weekly, daily, 1 hour, 15 minute, and maybe the minute. I take it pretty deep. I go into the seconds sometimes. It helps me get like really finite entries, but it also sometimes does cause me to make a lot of mistakes as well. So obviously it's things that we're learning with time as we get better at trading. but this is Friday's close. As you guys can see, this is the gap, and when price opens at 6 p.m. Sunday, we traded higher. 11 p.m. made a high, and then 12 to 7 a.m. we traded down into the gap, filling it with any inefficiencies with sell orders, and then the market rises. So then this is Sunday, Monday, and then Tuesday, and then Wednesday. So Wednesday we see here, we create a high, and we do 3 triple top highs. So it's a high, then a higher high, then a higher high. Kind of like a 3 push divergence. That's what a lot of people like to call it. And what I want you guys to notice is we came to the weekly high. So we have a triple top here at the weekly high. We failed to reach the weekly high, and we tapped a whole level of 30,000. And look at how quickly price came lower and rejected that 30,000 level in the weekly high. It was simply because it needed to come down to the daily breaker block, find support, take some liquidity, because we rushed higher a lot in August. As you guys can see, we have a daily bullish, 1 hour bullish fair value gap, which also could have been used for this entry here. But I believe I had a fair value gap here at one point, but I just focused on this. So we saw price needed to retrace lower, and we knew this was a daily breaker block, so I didn't expect price to go any lower. And then we did a high, low, and higher high, creating a breaker block, which is why it's purple. And then as you guys can see, several taps at the 705 and entry zone here. That's where I entered in one of my trades. We got a beautiful, beautiful trade. We have intermediate highs here, and price traded all the way near 30,000. And that was a very, very clean trade we took. Took a couple buys here as well. Got some very good trades here. As you guys can see, I was trying to keep going higher, but sometimes the market's going to consolidate. As you guys see, this is a consolidation zone, a very small one, but an hourly consolidation zone, because price came down and up from the same level, and then manipulated lower, took out sell side liquidity, came to the entry zone from the other trade, as you guys can see, that we took. So sometimes they do this to take out anyone that bought. So let's say you bought here, whoever had bought here usually tends to move their stop loss to break even, protecting their trade from any risk, and then they come and take you out of the trade before they see any real profit. So then you see here, price comes, takes sell side liquidity, and then as soon as that happens, we reverse higher and tap that 30,000 level. And then we come, consolidate a little bit longer, and then as you guys can see, this is a very good trade that I took. It literally was honestly perfection. We just basically knew this was 12 a.m. We were bullish, and we had a lot of things in confluence for us here, because we already knew we were in a bullish trend, because we saw the August traded higher extremely fast, and then the retracement tap was inside of a breaker block which held, and then we also took out liquidity right here from this level and kept pushing up higher. So we're constantly seeing price trade higher, retrace, find support, and then consolidate, and then find sell side liquidity, take sell side liquidity, and then continuation higher after it takes sell side liquidity. So what I did is, this is previous new week opening gaps and highs and lows that I utilized for this trade. And once I don't think I traded in between here. I think I didn't trade Wednesday at all. And then Thursday came, and we saw how we had come. We tapped the highs. It tapped the high, but do you guys see how it's kind of still liquidity level? Like, it just came to take out the liquidity here, consolidate, and then as you guys can see, obviously in hindsight, price traded higher, But what I want you to point out here is that we're inside of a new week opening gap from the previous week. So what I did is I took the midnight open, the previous week's new week opening gap and high, and I also just marked the highs and lows in the hourly. So we were like over here somewhere, or if the highs and lows. So the high was 1 a.m. and then the low was 5 a.m. And then we come back down to the 15-minute. I'm going to explain a little bit more of this trade for you guys. So then I basically just waited. I was waiting here. I waited for price to trade lower and take that sell side here, which it did. And once that happened, I actually have a trade that I entered, an account that I entered at the low, and then an account that I entered over here. So we're gonna go in the 5-minute now, just for me to show you guys the entry, okay? So then we see price taps the 1 hour low, and then we get a push higher. And as you guys can see, this is 820, 825. So I think we had some sort of news here because we had this gap. I'm not too sure. If I go on the 1 minute, I think I had a volume imbalance here, and that's what the yellow is. But I basically had a trade at the 1 hour low that when it opened. I think I might have taken a trade at the 50% of that candle. If I go into the 1 hour, I think the 1 minute, it should make more sense. And the breaker block was just an area I was watching. I don't think I entered there. I think I entered more lower. I thought it was too messy in here. But the thing that you could have done if you had missed these two was the entry at the inverse level. So as you guys can see, we had a bullish fair value gap here and an inverse level. Both together was the perfect entry for the buy. But obviously the ideal entry would be entering where the 1 hour low was taken. So that was probably one of the best trades I had this week. I had some other good ones, to be honest. This was also another very good one. I think we caught it a little bit higher, like we got up to here, and then we got stopped out here some because we were trailing our stop loss. And so basically my thought process here was, let me go back to the 15. We had a bullish level. We passed the 30,000 level, which is a whole level of support, and also the weekly high. But these also all becoming support levels. I kind of was looking for buys, and then we also had a 15-minute bullish fair value gap, and that is basically what I was watching. So what I did again was I marked up the 10 a.m. open, the 10 a.m. high. And then what I did was, once I saw that the 10 a.m. low was taken and we tapped inside of the bullish 15-minute fair value gap, I think that's when I went to the lower time frames, as you guys can see. And look at that entry. So it traded down into the lower time frame. Let me see if I can try to. 15-minute came down. This is the first 15-minute candle, and then this is the second 15-minute candle. And this is 11:30 and 11:45, and then the next candle is the 12 p.m. open. You see that? So when I go into the 5-minute, this is what I want to show you guys. So the first 15-minute candle came. We traded higher, tapped inside of a bearish fair value gap, and then we traded lower, taking out that first 15-minute candle that happened at 11:30 at 11:45. So 11:45 trades lower, takes out the 11:30 lows, taps the 50% of the 15-minute fair value gap, and then does a bullish engulfing candle, taking out all previous sells from 11:45, making a market structure shift. As you guys can see, we have a 3-candle pattern. Red, yellow, green. That's what I like to call it. And you always want to enter between the yellow and the green. So then you mark your green area zone of entry. I put my stop of my entry at the 50%, and my stop loss was 50 points. And as you guys can see, it almost took us out there, but it was a pretty good trade. This is not exactly where it is, but we did enter at the 50%. Trade held. Depending on that number of points you have and the amount of money you want to risk, obviously the amount that you can risk changes. So this trade did go higher. We took buy side liquidity. As you guys can see, if you guys had missed the first entry here, the second entry would have been here after we see the price trade higher and take that high, this bearish level now turns into a support level, and you could have bought both times here and then targeted the highs. Would have been 50 point. You could do a 50 point here, could have done a 50 point here, all would have held, and you would have caught over 266 points. Now you gotta do the math. And I'll do the math here just for you guys to see. 266 points times 0.5, that's one contract. Equals $133. And then I'm just gonna do every extra contract is an extra 50 cents. Okay? That's obviously 266. That's 389. I'm gonna do only up to 10, okay? That's how much you'd be making with 266 points based on the amount of contracts you use. Okay? So, depending on the contract size, that's how much you would be making on NQ with just that amount of points. And obviously, I'll just do this for contrast. If you had gotten a lit trade like this, where you caught the entire move from the very first origin point, so that's 386 points that you caught, and I'm just gonna do the times 5 with the 386 points just for you to see how much money that is. 36 times. Okay, that's with 10 contracts. And just for illustration purposes, we're gonna do times 7.5, which is 15 contracts times 386, just for you guys to see how much, as you guys get more confident in it, how much it can be. Now I know this could be some people's monthly income, $2,895. And it doesn't even need to be a monthly, income. It could just be an extra income you implement towards another investment, another opportunity, your investment accounts, real estate, something else to give you money so you're not just reliant on your job. But that's basically my breakdown. I really hope you guys took something from it. If You guys enjoyed it, give it a thumbs up. If anything was insightful, if you guys have any questions as to anything that I said, drop it down in the comments. And I would love to hear what you guys thought. If anything was helpful or insightful, let me know. Thank you. Have a good night, rest of your night. And I'll see you guys next week.